Here's the way it works. When you buy a home, the first year you buy the home, you pay the property taxes of the previous owner. That's because under Florida law, January 1st is what we call our date of assessment. So when your November tax bill comes out, it's what was the property on January 1st. That's the day we determine the value of the property. We apply all exemptions, and so you know what your property taxes are going to be. And when somebody buys a property, their November tax bill, if it's after January 1st, is going to be whatever the taxes were of the previous owner for that year. And then what occurs is the next year on January 1st, it gets reassessed to market value, usually based on the purchase price, and all that value the previous owner wasn't paying property tax on goes away, and usually the taxes go up significantly. And so one of the worst calls I'll get every single year, and it happens a lot, is people will call me and they'll say, Marty, I just got this nasty telegram from my escrow company saying that I owe $4,000, $5,000, $6,000, $10,000 more. I didn't know this was going to happen because of what happened to my property taxes. And really, there's really nothing I can do to help them. And that usually happens with first-time home buyers, usually young families who are already struggling to make ends meet. And so when somebody like yourself, they're real estate agents, tell somebody, listen, before you buy this property, just make sure you can afford it. This is what the property taxes are. It gives people that opportunity to know if they're really going to be able to afford the property and to be prepared for that big increase that's going to happen the year after. So thank you so much for doing that. And here's what occurs. I'll just give you a couple examples. If somebody's an existing property owner, let's say they've owned their property for 20 years. When they bought their home, they filed for homestead. And once they did that, they got the Save Our Homes assessment cap of the Florida Constitution kicked into place. That basically said that every year thereafter, the value they're taxing can't go up more than 3%. So over time, their market value gets very high, but their assessed value stays capped. And they have all this value in between they don't pay taxes on. And so what occurs is when they get their tax bill, it's basically going to reflect only what their assessed value is. Their market value is based on the sales from the year before, but their assessed value is capped because of the Save Our Homes assessment clause. And then what we do is we apply any other exemption they're entitled to, whether it's a widow's exemption, a veteran's exemption, it could be whatever it is to get down to their taxable value.
So basically what I understood is, right, taxes feel like they go up so much is because when you're a current homeowner, if the values around you that year increased 10%, or we've had crazy increases here in South Florida over the last 3 years.
We have.
Even if they increase some crazy amount, my taxable amount cannot increase more than 3%.
That's the cap.
Which is a great thing, and that's at the maximum. So if you're a homesteaded property owner, the Save Our Homes assessment clause, like I said, it kicks in, and it basically says that every year after you own the property, the value you're taxed on can't go up more than 3% or the consumer price index, whichever is lower. And the past few years, because inflation's been so high, the state has set it at the maximum 3%. So property values, though, especially since COVID, have increased substantially. People are coming from all over the world. They're paying a lot of money for properties in Broward County and in Miami-Dade County and Palm Beach County. And so what's happening is the market values are skyrocketing. But if you owned your property and it was homesteaded, the value you're taxing can't go more than 3%. And so you have a lot of value you don't pay taxes on, which is a great thing for any existing homesteaded property owner, because there's also a great program called portability where they can actually move that value to another property and not pay taxes on it. So you want your market value as high as possible, especially if you're homesteaded, because your assessed value is always capped.
Awesome. And again, if you have any questions, I guess we could call you and you could go over
Absolutely.
exactly how this works.
Can I explain portability?